criminals are getting very, very good at that. Historically, that wasn't the case. Historically, what we saw was primarily around compromised information or compromised channels. So that's things like credit card fraud, or it could be identity takeover, so compromising someone's information that way.
You know, they can track what the trends are, and they can start writing their own rules.
And I mean, it's not just restricted to Africa in terms of who the perpetrators are. It's everyone all over the world.
How can institutions kind of get ahead of the risk? Because I'm assuming that ultimately financial institutions are going to get caught in the middle.
They really have to look at fraud prevention to differentiate themselves from their competitors.
You want to have least friction as possible.
Correct.
When it comes to making a payment, right?
Yeah, and everything does actually ultimately come down to value, doesn't it?
Yeah.
Yeah, 100%. It really does. The payments ecosystem is moving at unprecedented speed. Digital payments, always-on digital channels, innovation and technology, all of these are combining to make payments as fast as possible for consumers. However, the speed introduces risk, and South Africa is currently sitting as the highest global country for suspected digital transaction fraud. Well, it's ranked among the highest countries. More worryingly, criminals are evolving just as fast as the technology, especially as fintech. They're using the same tools, the same technologies, AI and machine learning, to craft and cultivate solutions and attacks that are basically moving faster than the banks can prevent them. So we need to think about smart ways of managing digital payment and digital fraud. In this edition of ITWeb Business TV, we are joined by two leaders from ACI Worldwide, Yvonne and Damon Madden, where we are going to be discussing the fraud landscape, the challenges, the issues, and the technologies that can be used by financial institutions to protect consumers, to protect money, and to basically reignite consumer trust when crime and payments are moving at the speed of innovation. I'm very glad to have you here today. And my first question to you is, what does the landscape look like today? Like, what are some of the biggest things that are taking place and the trends shaping the landscape right now?
Okay, thank you. My name's Damon Madden. I'm a financial crime consultant for ACI Worldwide. I've been in fraud and financial crime fighting for the last 20 years. When it comes to the landscape, it's been changing over the last several years. What we're seeing in this environment today is primarily around authorized push payments or scams. So it's primarily driven by the customer being complicit in the fraud process and it taking place. And it's really centered around social engineering. So several examples come to mind where it's sort of, they can either be something like a romance scam, or it could be a crypto investment scam or something to that effect, where the customer's engineered over a period of time to then be told or have the comfort to then send the money to an illegitimate sort of entity or person or whatever it might be. We're seeing this more and more. The criminals are getting very, very good at that. Historically, that wasn't the case. Historically, what we saw was primarily around compromised information or compromised channels. So that's things like credit card fraud, or it could be identity takeover, so compromising someone's information that way. But since sort of COVID, this scam approach has really sort of exponentially grown. It's getting to endemic proportions.
Yeah, and that's interesting because I think that the way in which these scammers have approached people has become more about building a relationship before making the move. And how long does that normally take? I mean, this is a very long tail.
Yeah, well, it depends on the type of scam. So we sort of have, there's two tracks. There's sort of an urgent approach where, okay, you may get a call from, say, a police department or something saying, if you don't pay this fine within the next 5 minutes, we're going to come and arrest you, and sort of jolt someone into initiating a payment that wasn't intended for. And then you've got the slow burn or the large scams, which might be something as simple as a romance scam where, you know, it's actually a man on the other end that's falling in love with a poor guy and wherever, or woman or whatever it might be. And they then, you know, something will happen. There'll be an accident, someone's parents, they'll have to send money, and then they'll start to just extract money from you over a longer period of time. So there's kind of those two approaches that we see primarily. yeah, it depends on the situation. Like I had one that I responded to sort of it was a few months ago, and it was interesting to see it was an investment type scam one. And what they did was, the hook to get me in was, they said, earn cash quickly. And basically what they did was they asked for my banking information so that they could pay me an onboarding bonus fee. So it was like a small fee. So basically they were trying to get my financial information from that to then legitimize that I actually had that bank account. Then once they'd done that, they then sent you off to do a series of tasks. So you had to complete these 10 tasks, and it's a dirham bonus that you would get. And they were just slowly putting you into this. And then it was like, okay, if you want to get to the next level, you'll have to put down 5,000, and then, and then the process goes on and on and on. And over the space of 4 hours, I was in communication with 4 different people. There was one on WhatsApp that was collecting my financial information. There was one on Telegram. Then there was another group Telegram. And then eventually, after I sort of stopped responding and, because I wasn't going to go through with it, they were calling me. They started calling me. So within the space of 3 or 4 hours, there was at least 4 people dedicated to just focusing on me. And it was really interesting how they sort of pushed it in a group mentality. Like they had a group WhatsApp and a group Telegram. So you felt like you were part of something. I don't know if the other people were real or not, or whether it was just all AI or computers or whatever, but that's what we saw there.
Yeah. So it gave you a sense of like being part of it. It's playing a lot of psychological.
And that's why we're so susceptible to it. I mean, one of the things that I know in that particular area, and historically when we saw a lot of this fraud sort of going back sort of from 2007 to 2015, when I was working for the bank, was a lot of people fell for these types of things when they were under duress. So when I say under duress, someone might be in hospital, you might be tired, something might have happened, you might be agitated, and you're not actually thinking clearly, so you'll do something stupid. And interestingly enough, you would think that the ratio of who gets targeted would be wholly towards the elderly. However, what we find is the under 25s who actually don't have that much money, they're not targeted that much because they don't have much money. But the curve is that it's actually quite round in terms of who gets targeted as you get older. There is a higher point when you're elderly. However, it's not as, we all think we're too smart to get fooled by this, but the reality is we can get fooled, and lots of people do. And they target different scams for different people.
Yeah, knee-jerk reactions, fear, all of those things. Yeah, no, exactly. I mean, look, if I got an email from SARS telling me that I need to pay, or WhatsApp saying you need to pay now, I would, for a brief moment, hover over the pay now button in fear. So I totally get that.
Your attention.
Yeah. So actually now, while we're talking about SARS, what is it like in South Africa? What are some of the differences between global trends and local?
Thanks for the question. My name's Yvonne Elford. I'm currently the lead for Commercial Africa. I have been in the IT payments world for the last 6 years, and prior to that in the banking industry. So many, many years in the financial sector. So yeah, I've seen quite a few things coming and going and the changes as Damon's discussed.
Sure.
Unlike some mature markets, South Africa faces a unique blend of high digital engagement and low financial literacy, making consumers more vulnerable. So additional regulations as well with regards to the framework, and they're still catching up on the pace from a South Africa perspective.
Yeah.
So that creates gaps for the fraudsters.
It does, because, I was reading the other day, actually, that a large percentage of SASSA bursary people get paid SASSA payments
100%.
are spending that money on gambling,
100%.
online gambling.
Yeah.
Their money is just disappearing.
Yeah.
It is
Sad but true.
Yes.
How much in Africa we actually use USSD payments as well is another area that's sort of different to the rest of the world. And it's highly susceptible to fraud. So that's where you have the normal mobile phone, the M-Pesa if you're in East Africa. That type of service is definitely quite vulnerable given there's low identification rates sort of in terms of the KYC that's required. So, a criminal that you want to send it to can quite a lot easier than actually having a bank account can actually set something up. A lot of these scams are coming out of Nigeria and also Kenya. So Kenya's quite a place in which a lot of the criminals are actually residing as such. Young population, everyone wants to get get rich quick, I guess. So this does become something that they would be a part of. And I mean, it's not just restricted to Africa in terms of who the perpetrators are. It's everyone all over the world, but it's definitely those two markets where we see a lot of that taking place. I'm sure it's in South Africa.
And also don't underestimate how smart they are.
Yeah,
They are smart as anything.
It's their career.
Yeah, exactly. I mean, you look at what cybercrime can make you for a business. I sometimes do regret having ethics.
Yeah.
Yeah, and phones have leveled the playing field as well.
Yeah.
Like anyone can learn anything now if they really want to.
Yeah. So one of the things that obviously we'd like to unpack today is the correlation between push payments and fraud, and also how customer expectations are pushing financial institutions and payment solutions to the edge, where they're constantly trying to keep up with what the customers want, and the customers are expecting trust while also getting with the next generation tech. Can you talk me through just kind of some of those issues?
Yeah, so it's the instant nature that's the difficult part, and the other side of it too is it's your money that you're losing, which makes customers quite inflamed. Whereas you think about credit cards, it's effectively a loan, and there's certain regulations that are in play with credit cards that are centered around the US that makes the customer less liable for the transactions. When it comes to instant payments, we have to be a lot more careful in terms of the regulation. The onus or the liability may be with the customer and not with the bank itself. So we are seeing a lot of regulation trends change when it comes to that. But the instant nature of it is what drives it. Historically, when you made a bank transfer to pay, your bill or whatever it might be, they would go through a nightly batch process. There's a long period of time between when the money is actually sent and then when it's received by the recipient. With instant payments, it's here, it's now. There's a lot of time for the criminal to then hide that money and make that money disappear so that it's not recoverable at all. The other layer that comes in that makes it a lot more difficult is pool payments. Which is the next step of your instant payment network. We talk about push payments where you initiate the transaction yourself. A pool payment is where you might ask me, okay, I have a bill to pay. You send me the bill. I press the link on the bill, and then that initiates the payment. So then you become susceptible to email types of scams, WhatsApp scams, all types of different scams.
Ad scams.
So authorized push payments, they're becoming incredibly valuable, and they're having quite a significant impact both on financial institutions and obviously in terms of fraud. So what makes them so difficult to detect, and how can institutions kind of get ahead of the risk? Because I'm assuming that ultimately financial institutions are going to get caught in the middle of this.
More recently, we're seeing a lot of providers provide behavioral biometrics. So how you interact with the device is what's driving how they identify you. So that's really good detector of, okay, my customer behaves in this manner. Now I've got this criminal actor that's acting as my customer. They're behaving in a different manner. So that's something that you can utilize. On the flip side, from a banking perspective, we usually have a transactional fraud engine. So that would be looking at where you're paying your money to, how much you're paying, whether you've paid them before. We run some machine learning, some AI over the top, all of that great stuff to actually do detection. But that's traditionally the transactional layer. So you would use those approaches together in order to get the best sort of detection. When it comes to scams, they're incredibly difficult to detect, primarily because it's the customer doing the payment. So everything looks like it's legitimate. The only sort of indicator is, the beneficiary, so who you're actually sending the money to. But there's also some other behavioral biometrics, and this is an emerging field that's sort of coming out now. And the behavioral biometrics is looking at, can you detect hesitation? Especially with romance scams or investment scams, people don't want to admit that they've been taken advantage of.
Yeah, I mean, as you said, everybody thinks that they're invulnerable, but they're smart enough not to detect it, and whethout realizing that, these scams are very clever. Can I just take us back to the biometric thing? There are two things that I want to just kind of talk around that with you. The first is whether or not that technology is here. Like, is it in South Africa? Is it something that, because our institutions are obviously quite advanced, I think they're among the best in the world. So is it here? And then the second sort of running in parallel to that is, while it does provide a measure of protection for the customer, it also introduces a measure of invasiveness. Like, you are detecting somebody's motions. You're lying on the couch at home and you're deciding to buy a leopard print wheel cover from Temu. You don't necessarily want that to be something other people measure.
Yeah, I mean, it's not at that level. So what you would be looking at is you would have some kind of authentication event.
Yeah.
Okay, so we're not talking about monitoring you all the time. And say you go to your internet banking on your favorite banking application. You go to log in and it will trigger an authentication event. And that authentication event will take a period of time or a period of window that will ask you to do something, or it might ask you for a second factor, whatever it might be. It's that process. We're not sort of capturing the whole, what you do every day, everything like that. It's confined to just certain events in terms of what it's doing. I mean, maybe there is a future where that is required. I'm not sure, especially with AI coming on board, that may well be the case because, AI can be you at any time. It's specifically, it's like a capture, like a capture device. It's effectively the same thing. It's like measure the traffic lights. So you go in, you press it, and then you go through. It's an authentication event. It's something that gives them enough information to say, hey, this is a human. It's not a robot. Whatever it might be. So that's primarily what the focus is. And is it in South Africa? I'd have to talk to the local banks. There are providers, I'm 100% sure, already offering these services here. But that is what a lot of our customers are moving towards, is adding that layer of capability onto their transactional fraud engine as well.
If they don't, and if they, and not necessarily in terms of biometrics, but if they don't think about adding on these layers of protection and they aren't moving with these evolutions in payment, what are the risks to financial institutions over the next 12 to 24 months?
It's very much reputational risk.
We have this thing it's measured by back of wallet behavior. So, a lot of people will have bank accounts with multiple institutions, and same with credit cards and things like that. And what we find is once they have a fraud event or something that's taken place like this, often that will go to the back. That will go to the back. And then, the other problem from a financial institution's perspective is, okay, if everyone else has this technology and you don't, who's going to be targeted by the fraud? It's going to be you.
Yeah, which kind of aligns with your report, the ACI 2024 scam scope. These scams are fundamentally eroding customer trust. And I think it's really important for us to talk around why emotional manipulation is such an effective tactic, and kind of also where financial institutions should be going to manage this, in terms of managing customers.
Okay, so, I mean, from financial institutions' perspective, they're leading organizations, especially in South Africa. I mean, our banking functionality is very, very strong globally. But they must start looking at this as a differentiator. They really have to look at fraud prevention to differentiate themselves from their competitors. So I think that's really strong. And they must the customers must choose who their service providers are,
based on how they have actively moved towards fraud prevention. Can I just interrogate that for a second, though? So when you say fraud prevention, what specifically should they be doing right now? And what should they be looking at over the next few months? Like, what are the two different areas that should be a priority for these institutions?
Well, I think Damon can chip in here for me as well. But basically, the legacy systems are siloed data. Okay? So, and the resistance to change is
even in our banks.
Even in our banks. So it is a blocker.
You want to have least friction as possible.
Correct.
When it comes to making a payment, right? So whoever's got the least friction, look at Amazon, for example, buying something is just so easy. Whereas with other merchants and things, it's multiple screens and this and that. It becomes more difficult, so you don't use them. Everyone goes to Amazon, right? So if we think about it like that, the better your fraud prevention systems that you have in place, the more data that you have. So Yvonne talked about siloed data. We're talking about sort of having an enterprise level view. So understanding the whole customer journey from end to end, so that you've got the whole view of who the customer is, so that you have as much data as possible to make good decisions about whether it is the customer or whether it's someone that's maliciously targeting. That's why it's a value differentiator, is because the more or better prevention that you have, the more you invest in that technology, the less genuine customers are going to be impacted, because there's always a genuine impact when it comes to declining transactions or declining payments or whatever it might be. So you want to invest in that technology. You want to have that frictionless experience so that you have that full customer journey. You have that good customer journey. And one thing that I would say is one negative event in someone's life propagates. I think when we were at the bank, we did some numbers on this. It was on Twitter, and it was a negative experience propagated 10 times further than a positive experience.
Yeah, the human brain is wired to remember what's negative as opposed to what's positive as survival instinct. So
Yeah, correct.
Yeah.
That's it in a nutshell. I think where it's sort of changing now is the introduction of AI, though. That's kind of changed things a lot. That's something that we're investing heavily in terms of keeping up with the criminals, because they're all utilizing these services too.
Yeah.
And I cannot thank you enough for saying that, because that leads us perfectly into my next question, which is how AI and machine learning are affecting and influencing
Well,
the ability to combat fraud. Yeah.
the crime side's always got the upper hand, right? Because they're not restricted by regulation. Like they can effectively use whatever algorithm they want. They can do whatever they want. So they've always, at the moment, they have the upper hand. When it comes to AI, I mean, from a crime perspective, I think it's driven a lot of the growth recently, because what used to be just one person actually facilitating the crime and making it happen can now be done through agents, and can be propagated out. So you can have multiple people being targeted at multiple instances, which you couldn't really do that before, couldn't be automated, right? On the prevention side, we're seeing changes in how we operate, where a lot of governments around the world are now enforcing that every institution needs to have some kind of fraud score. So what that means is they need to have some form of AI or machine learning that sits in place that actually scores every transaction that comes through. We see that at both a network level, from a central infrastructure. So, who facilitates the payments, like Swift, for example, that they will actually offer a score, so they can actually, because they get to see the whole landscape across the board. We're seeing that a lot. That's been a real area of increase, has been around that central infrastructure. And then the machine learning side and AI, we're moving forward with that. What we're seeing being utilized for today when it comes to fraud prevention is more around improving your processes. And the reason we don't see LLMs and things doing magical stuff in terms of fraud prevention is the cost, right? Because the cost of these new exotic chat GPTs and DeepSeek and whatever it might be, they're quite expensive to run, and they don't scale as well. Like when we talk about fraud prevention, we're talking 1,000 transactions per second. I've got one bank that does 10,000 plus transactions a second. And to do that through those large AI models, it would be, you would need enough power for a city to run it. So the costs wouldn't be there. But I think we'll see that change in the future. We are integrating AI into our products and services every day. Like I've got several that I've integrated directly in to help us generate rules, to help us build features for models, to automate workflows, and also generate sort of compliance reports and things like that. The area of AML is going to be interesting, money laundering, because AI is going to make financial transactions a lot more complex, and it's going to make the structures a lot more complex, because it's going to have the ability to sort of find different paths of actually committing the crime. And I see that as a big area of investment in the future, because as those transactions become more complex, and as these company structures become more complex due to the AI becoming involved, we will need to come up with ways in which we can detect that. And the only way to do that will be utilizing similar sort of services or similar sort of AI
And quickly.
processes.
Yeah. How do you feel that's going to change the stance from being more of a defensive or reactive stance towards scams to a more proactive one? Because that feels like a slightly more feasible, not powering a city move.
Yeah, so that's more utilizing sort of traditional approaches to machine learning, and utilizing that. And that's mainly because we can get that to scale. We can get that to scale quite easily. So we can profile our customers' previous behavior. We can do regular sort of logistic regression models, things like that, different types of algorithms that we know scale to large numbers. We're talking 10,000 plus TPS. So predictive analytics, when it comes to that, is what we utilize. And a lot of that is around having adaptive approaches. So when I say an adaptive approach, it means that sort of as a fraud trend changes, you want your model or your scoring algorithm to change with it. So we definitely utilize all of those types of services today, or those types of algorithms today to drive fraud prevention. And they are very effective because we only have limited data points when it comes to the data that comes to a financial institution, or the data that comes to a bank when someone's making a payment or a purchase. It's quite a limited data set. It's not a massive, long, lots of different data points that you can leverage. There's probably between 20 and 40 data points that you can use. So using that predictive analytical approach really makes it easy to detect and to manage the whole process in itself.
Yeah, what's interesting in what you were saying there, which actually I think takes us back a few steps to something you mentioned earlier, is that potentially shared data, shared insights, and cross-company industry collaboration. I mean, how do you guys feel about that? Do you feel that's critical to change the narrative? Do you think that is the only way forward?
Yeah, it's definitely critical. South Africa was the leaders in that, actually. So I think it's SADC, the name of the governance structure, which was set up in conjunction with the police. I was involved in the Australian Financial Crime Exchange, which is a similar sort of thing that we set up there. And we looked heavily to the South Africans for that. Yeah, definitely. You were very early on that. A lot of that, I think, was around mail fraud and identity takeovers, what drove that, because that was a big problem, mail theft in the early 2000s. So, yeah, we looked at that quite extensively when we were setting up the Australian Financial Crime Exchange. They're going to be crucial in future. We've invested heavily in that. We have a product that we offer that does exactly that. And it's around, the canary in the coal mine scenario is what I would describe. Like a fraud flare up will happen it may happen in one institution, might happen in multiple, but it'll happen in a particular area. And having that data being centralized or being able to be aggregated together across an industry.
And identified very quickly.
Yeah, you can see something that's happening. And what that does is, okay, there's a problem over here. I can do something about it before it becomes a problem with me. Or it may highlight, okay, what controls do these banks have that bank doesn't have, that they can then say, okay, if you put these controls in, that'll stop that particular crime type or whatever it might be. And we see that as the future. And the other thing too that's worth mentioning here is you're not going to have one solution that does everything when it comes to crime. You'll have a core fraud prevention solution within the bank that looks at the transactions and the logins and the authentication. But then you want to have additional intelligence providers sitting over the top of that. So it might be mobile phone providers for SIM swap fraud. That's something we haven't even talked about, which is where someone steals your identity and steals your SIM card so that they can then get the second factor authentication sent to that. So having the ability to have API calls to mobile providers is another example of how information can be then added onto the data that you have, can be enriched into that message or that repository so that you can then utilize that service. And integrating those services is really key. And, you want to be able to do that quickly and at low cost, because you don't want to go through you want to go to a provider. Maybe the data is not as good as what you think. They've sold you something that doesn't work. You don't want to go through a whole 12-month thing, integrating it into your thing, integrating it into your fraud prevention solution, and then having it not be effective. Like no one's going to want to invest in that, right? So what we're doing or what we're focusing on is really making that as easy as possible, making that whole process easy. So fraud managers can say, hey, I want to take information from that provider. If it doesn't work, they'll go to another provider, similar to how cloud operates, I guess you'd say.
And we give them the ability to write their own rules.
Yeah, of course.
Yeah, that's amazing.
So, they can track what the trends are and they can start writing their own rules.
Yeah, and then obviously if they do collaborate, they can create their own pockets of best practice, which then benefits everybody else, which is fantastic.
100%.
But there's one thing you said to me that struck fear in my heart. I'm going to admit this, was when you said AI and AML may potentially create even more paperwork.
It's coming. I think in the next 18 months, we're going to see big changes in how we do our daily sort of
100%.
life.
Okay, fair enough. But within that, I think the question here is you guys have got these amazing fraud solutions. And banks want these fraud solutions because of the cost to customer. But there's always that friction point, isn't there, between smooth business and security? There's always that rubbing up against each other. So what is that like at the moment, and how is that influencing decision making and customer responses?
I think a lot of the banks are hurting from this type of they don't know what to do. They don't know how to get a handle on it. And there are a lot of providers out there that are offering fix-all solutions that I know are not going to fix all. I know. You know, there's other providers that also offer equally as good solutions, but you can fall down a rabbit hole quite easily of the snake oil salesman, that AI is going to fix everything. AI is going to do this, and the reality is it's not. It's not going to do that. So we have a trusted, known solution that we can deploy that we know detects fraud. We have an experience in payments. We've been in payments for 50 years as an organization, 26 in the financial crime space. Yeah. So we understand payments. We understand how they operate, what the data points are, what data points you need in order to get effective detection and have effective prevention. But the worst case scenario is you get a solution, you start declining a lot of transactions, and the customers get annoyed. Your digital channel owners are going to get annoyed. Everyone's going to get annoyed with you because the company's designed to efficiently move money from one point to another, and you're restricting that. And that's always that's always the fight between a fraud manager and a digital channel owner is. So if you're deploying too many transactions. A lot of the problems come from the owner of the loss isn't the person that owns the profit.
Yeah.
So unless they're the same person, they don't have an interest in actually stopping. Do you know what I mean?
That is such a great way to put that, you know? That is amazing. Yeah, it is very true. So actually, I think with that in mind, do financial institutions still see fraud prevention as a cost center, or are they starting to see it as a competitive differentiator?
Oh, that's a good question.
That's a good question. Yeah.
Yes, is the answer. They are starting to see it as a differentiator. What you have in a fraud engine is you have an amazing tool that is quick at delivering decisions. And those decisions don't have to necessarily be about fraud. They can be about other things, you know, what interchange rate to set, or what upsell opportunities there are for a particular event as well. You know, like, I don't know if you buy something like a TV or something, and then all of a sudden you get offered insurance. That's the type of service that you can add that can be done through a fraud prevention engine. So we are seeing a transition away from it being a traditional cost center into something that can be a bit more front of house. On the other side is the data. Financial crime departments and fraud departments have amazing data because they get all the data from all the different areas of the bank. They know how to interrogate that data. They know how to present that data. So from an internal customer perspective within a bank, we do see them taking more of a front foot because they have access to a lot of data. So if they're able to actually leverage that, they can turn that into an internal, it's quasi money, but they can turn that into something that does drive value for the organization.
Yeah, and everything does actually ultimately come down to value, doesn't it? Yeah, 100%. It really does.
Yep.
So looking ahead, what would you define as a best practice fraud prevention strategy for 2026?
It is time to start investing in, firstly, automating the customer contact strategy is one thing I would say. So how you interact with your customers, that needs to become a lot less friction. There has to be a lot less friction there. So moving more to an autonomous approach to actually integrating, being able to leverage different services or different intelligence providers. So having a solution that can have open APIs or APIs that can interact with the outside world.
Yep.
And then machine learning and AI. I mean, watch this space when it comes to AI. We'll be no doubt announcing things in the future that will be specific to that. But it's really centered around machine learning. Like what we used to do with rules, we can now do with significantly less rules within a system, and then we push the onus onto the machine learning. So the machine learning will do a lot of the daily tasks that used to take place that you'd have to adjust threshold and this type of thing. Machine learning can take care of that process for you. So usually we see between a 40 and 60% reduction in total rules or strategies that you have in play. to then moving to a scoring-based approach, sort of 40 to 60%, which reduces your number of alerts, reduces your false positives. And again, like watch the AI space. I don't think anyone's got a great AI solution in the market just yet, just because of that scalability function, like that scalability problem. But in terms of offering overlay services that are AI-based, that interact with the fraud prevention system, that's definitely what we're seeing as being best practice now.
Yeah.
Okay. No, that's amazing. And then what is one misconception around fraud that you would love to dispel? Just like one thing.
It can happen to anybody.
Not just a technology issue.
And if you are the victim of a scam or something, there's no shame in that. I think the more awareness we have of these problems, we don't want to hide these problems. We want to make sure that they're out in the open. Make sure that you report them to your bank. Don't let it take place and not tell the bank, because then it's unreported. We don't know that it's actually taken place. I think that would be sort of the
Yep, agreed.
Yeah. Okay. Perfect. And then Yvonne, I'm going to start with you
Yes.
for the answer to the last question,
Yes.
which is, if you have to leave our audience with one fact, one top tip, what would it be?
I would say invest in real time.
Okay.
You must adapt your fraud solution to your current solution. I think that's really important. The cost of delaying that is going to be huge.
Okay. So that is a really good tip.
Yeah.
Okay. Perfect. And Damon, what about you? What is your last tip that you would give?
last tip. You do need to invest, like just in general, in financial crime and prevention. Don't bury your head in the sand at this point. I will just brush it under the rug. It'll go to bad and doubtful debts. Those days are over. If you don't get a handle on what's taking place in the financial crime environment and how you can actually prevent it today, I think you're going to struggle in the market in the future, especially with open banking and things like this. There's a lot of more pressure on banks to divest from what was traditionally their cash cow generation businesses and become more of a wholesale provider. So I think in future it's going to be a more competitive environment, and having robust procedures in place and solutions in place is going to make all the difference.
Well, thank you both so much for coming.
Thank you.
That was a fantastic interview.
Thank you very much.
I'm now going to put all my money under a mattress. Have a wonderful, wonderful afternoon.
Thank you very much. The same to you.